someone kind of told us once too, is like, hey, if you're not embarrassed, looking back at your MVP and what you put out, like you probably waited too long to release it. And
welcome back to another episode of the Revenue Reimagined podcast. We have with us today Tony Sternberg, who is the co-founder and CEO of ProsperStack and has been in B2B SaaS for over a decade. Tony joined the startup world early in his career, taking on just about every role from tech support to sales to QA and product before serving as president of his last company prior to leaving and founding his own venture, which is ProsperStack. Tony, thanks for joining us, man.
Yeah, thanks, Adam. Appreciate it. Good to be on with you guys today.
Appreciate it. So one of the things we like to talk about and give like some feedback to founders is really what the origin story is. So why ProsperStack? Why did you start it? What's the connection? What drove you to do it?
Yeah, it's a great question. And, the founding story is always some of the funnest to talk about, I think. So happy to get into it. But as Adam alluded to in his intro, I started out of college at a startup. It was a bootstrap startup in the HR tech space. We made an applicant tracking system for recruitment and staffing companies specifically. So we tend to have a lot of, 1 and 2 seat accounts, and they tended to be entrepreneurs and things like that. And I was always into technology. I was always kind of a tech savvy kid, and knew ultimately I'd want to, kind of get in that world. So it was a good opportunity to fall into, and I just was like interested in all of it. I had gone to some school for programming. I had, connected the dots between, sales and technology, and just kind of tried a lot of different stuff there. And when you're at a small startup with just a few employees, you're pretty much wearing all the hats, right? So, I would take customer calls when they had problems. If they had, if they were trialing the software, I would, give them demos and sell them it. And as we grew as a company, it was just natural to take on different roles. Really loved the product space, helping to craft the roadmaps and build the product into something that could be even more useful for recruiters. And that's really, an area that I just loved in the startup world. But it was really that company and that opportunity that led me to the idea for ProsperStack and why we wanted to build it. And, we had, I always say that we were very like pure SaaS. It was, sign up, put your credit card in, if you want to buy it, you don't have to talk to us. You can if you want, that kind of thing. But we always found that, as great as that is on the front end, like on the back end, when it came to churn and cancellation, we didn't have a great understanding as to like why people were leaving. And we didn't really do anything to try to keep them at that point in time. So it was very transactional, very self-service. So we, my co-founder and I kind of came up with an idea that was, a lot of companies got to have this problem. We were always trying to work on our core product, improve that. We didn't have time to build like, churn management strategies and stuff. So that's where the idea of ProsperStack was born. And then when we got into the weeds of how we could execute it, we felt that partnering with different payment platforms out there, so subscription platforms like Stripes and ChargeBees and Recurly's and et cetera of the world, if we integrate very tightly with them, we could create like a low code or a no code offering for other subscription businesses to tie into and really kind of have a plug and play active churn management solution. And that's what brought us to ProsperStack a few years ago. And it's been a fun run since then. And that's when we launched in the summer of 2020.
Nice. So churn is like a dirty word, right? It's the dirty word of SaaS that, no one wants to talk about, but everyone needs to talk about. Mm-hmm. And when you look at things like LTV and NRR and NDR and GRR, no one really knows, where do I focus? Like what is the one metric when it comes to all of those lovely acronyms I just threw out there that we really should be looking at? As someone who's looking at churn all day long, what are you telling customers to look at? Like what is that North Star on the churn side?
Mm-hmm. Yeah, I mean, I would say like the hottest term these days seems to be NRR. And, I get asked about it, from people that are concerned with how, our customers are doing. But I still look at LTV as one of the core most important metrics because it influences so many other things that you can do in your business, right? Like everyone wants to talk about CAC to LTV ratio as well. If your LTV is higher, you can spend more to acquire, things like that. So I still look at LTV as really the key thing. And really, at the end of the day, what we're helping people do by preventing, a cancellation or churn event is extend LTV. And to me, that's just going to drive so many other metrics in the business to help with growth that that's where I always center around.
Nice. Love it. Appreciate that.
Yeah. It's, what are, as you've gone through your evolution and journey, you've gone through from very early stage as coming out of your college days of doing this stuff. I didn't get in that early, but what are some of the things that you're doing now that people told you should do it X, Y, Z, or you should do it in a certain way, and you were like, threw it out the window and said, no, we're going to do it this way, and it was successful? Kind of some advice you didn't really listen to that everyone tried to give you.
Yeah. Well, I think a really interesting contrast where I spent so much time in the bootstrapped area where, I was pretty much conditioned to run the company in a very efficient manner. And there's nothing wrong with efficiency, but I would say efficiency at the cost of growth is a concerning thing. And I would say my biggest takeaway kind of going from a bootstrapped environment into ProsperStack, where we have raised some money, is really just not getting in the way of what the company could be. So my advice would be, if the company is demanding growth, if it deserves growth, I think it's better to go out and get the capital or equity, and to get capital needed in order to fuel it properly. Now, that doesn't mean you should just go raise money and try to grow it without a plan. But I think, as long as the company's demanding it and deserves the growth, I think it's your responsibility as a founder to go out and do that.
Love that. Yeah.
I think that's interesting. Like you talk about deserve the growth. I want to double click on that, right? Because we work with a lot of founders who call us, and it's either one of two things. It's either, how do I get to product market fit yesterday? Because I built it, they will come. Why aren't they? Or how do I raise money right now? But you're not ready to raise money right now.
Right.
What is deserving of growth? What is deserving? Because Dale, I know you were thinking the same thing. What is deserving of making money? Of raising money? Yeah. I like the term deserve, because there's this sense of entitlement. And I think entitlement and deserve are very different, right? Like I tell my kid, like you don't deserve this. What is deserving of raising money?
Yeah. And it really depends on the stage of company you're at. So it's very, like, unless you have a track record of exiting companies and building them, it's really hard to go out and get money without having at least a product built, or at least some customers, right? Even at that early stage, the investors are investing way more in you than your idea. They have to buy into the idea that there's a market for your product, but they're really investing in you and your ability and their belief in your ability to do that. So, I would say, like, on that pre-seed kind of angel stage, when you're looking to get that first investment, we didn't take on money until we had a product and we had 5 to 10 customers on the platform, right? So did we have product market fit yet? No, but we had something and we were getting traction, and we had a story to tell that people saw promise in. And then when it came to our second round of fundraising, which would be traditionally a seed round, then we it's a lot more looking at the indicators, right? What's your month over month growth? Are you kind of drowning in your own work and not able to do everything you want to do in order to like make the company tick? Now, you're still probably maybe don't have that product market quite just yet, but you're on the verge of it, cusp of it, or you've just found it. But I would say those were the indicators we looked for. It wasn't always going to be like, oh, we're just going to go out and raise money and try to build this $100 million company. It was, no, if the company has the indicators that it's ready to, maybe throw some fuel on it, then we would go out and do that. So yeah, we looked at, our month over month growth. We were growing 30% month over month for, about a year straight. And that was kind of our main indicator. And then we built a model and a plan around how we could scale up additionally, because, there's always going to be growing pains. When you go from a 3 or 4 person company to a 10 person company, you've got issues. When you go from a 10 to a 20 to 25, you're going to have issues, and you got to overcome different things. But you just have to have a plan and be ready for it, and look for those kind of signals to show that you're ready.
You mean the issues continue even as you grow?
Yeah. Hey, I haven't gone beyond like 30 in my sort of professional career, and hopefully we get to that at some point. But I'm sure I'll have a whole new set of struggles that I never anticipated.
Let me ask you, startups struggle, right? Mm-hmm. Like there's this balance of innovation and perfecting execution. Mm-hmm. You got to innovate, but you can't put out a crap product. But if you wait to
Mm-hmm.
put out a perfect product, you're not really going to innovate. How do you prioritize those two? And have there ever been instances where that balance is like really, or lack thereof, impacted the business strategy?
Mm-hmm. Yeah, I think it's a really interesting question, and yeah, definitely run into that. I think if you're a product person or if you're a developer or designer, like you probably have this more of like perfectionist
Mm,
attitude where you just want to get everything right, but you don't want to optimize before you know that it's going to work. Like what we put out in our first launch, we kind of whiffed, and we misjudged like the effectiveness of what we could do. And I'll give you an example of that is what we first wanted to do was create a no code solution. So we did post cancellation surveys versus with incentives and offers to retain customers. And what we didn't anticipate was like the response rate on that was like sub 2%. And we're like, this isn't ever going to work. Like, how did we build this, and do that? So we had to basically scrap all that and say, we need to actually be the cancellation process and kind of walk people through and capture that data and
mm,
make sure we can present everybody an opportunity to stay a customer. And that was like, something that we had to kind of go back to the drawing board for another, I'd say 6 to 8 weeks and relaunch the product, so to speak. But we were,
mm.
in that case, it was really important for us to be able to move fast. And, someone kind of told us once too, is like, hey, if you're not embarrassed, looking back at your MVP and what you put out, like you probably waited too long to release it. And I kind of took that to heart. And, I look back at how basic the offering was when we first launched, and looking back at it now, I'm kind of like, wow, yeah, I can't believe we went to market with that. But the customers, if there's a need there at the core and you have that basic thing solved, you can branch out and solve other issues from there. But we were able to sell it in that state. Now, could we sell it for as much money as we do now? No, but it provides more value as we built it over time.
Yeah. And when you go through that evolution, you got to try to figure out like where your pricing models are, how you actually evolve through that pricing model. And I know a lot of founders that we talk to have challenges with their pricing model. Like, give a couple of tips for people as they're trying to figure out that pricing model. Like, what can they do to test it and taste it and get that right mix? Like, they probably feel like I don't want to leave money on the table, but I also, I'm afraid to price it too high. What's some advice you have for them on that?
Yeah. I personally probably start on the lower end of pricing, but I think it's an easier path to get some traction. So my advice would be if you're going to err on any side, like definitely err on the low side. I wouldn't worry about optimizing your revenue for your first handful or 10 or 20 customers, whoever it is. Those are the customers that are going to help you build and shape the product, and so you can sell it for way more money later on. So treat them like gold and always give them a good deal. Don't worry about getting too much revenue going from them there. But then once you start getting confidence that, okay, I can sell this for $50 a seat or $50 an account, then double your price and charge 100. If people are buying at 100, double it again and go to 200, right? And then you start getting into other models. Like we had a very simple flat model. Now we have, a scaling offering of, we do like a quantity based, it's like a session thing. So how many like churn events you have, but then that's coupled with features. So we have a few different tiers of that. And we basically settled on a model that looks at the churn volume you have and charges you accordingly there. But there's a lot of ways you can do it. People ask us like, are you charging a percentage of revenue recovered? And we've always thought that's a really interesting model too, but it's also difficult to sell that way. Companies like predictable expenses and knowing what they're going to spend on you, whereas that's a little bit of an unknown, even though it might make sense. So yeah, I would say kind of summing it up is, especially when you're early, price it relatively low, get some people on there, get the feedback going. But I think you also build up your own confidence in your own ability to sell when you start increasing it slowly, and then you sell it for double that and double that again. I think it really kind of just helps you sell it. Because I could never have sold ProsperStack for $500 from day one. I couldn't have. We sold it for 50, and then we sell it for increments in between, and that was really helpful to us.
And I think one thing that's super interesting that you were saying, and we talk to founders a lot about this, especially when you're first starting off. Everyone wants to get to revenue, or they have an investor or whatever it is, and they're like, we need to get to $1 million ARR. And we always have a conversation like, you kind of have to pick logos or revenue. Like you can't really pick both of them and try to measure both at the same time early on, because you're just going to totally collapse the model, because you're going to say, oh, I had $1 million in ARR. All of a sudden you need 4,000 customers because you have to price it at a lower rate. So I appreciate that.
Definitely.
People buy from people. That's why companies who invest in meaningful connections win. The best part? Gifting doesn't have to be expensive to drive results, just thoughtful. Sendoso's intelligent gifting platform is designed to boost personalized engagement throughout the entire sales process. Trust me, I led sales for a Sendoso competitor, and I could tell you, no one does gifting better than Sendoso. If you're looking for a proven way to win and retain more customers, visit sendoso.com. I think it's interesting. So you charge more the more churn someone has, right? Did I hear that right?
Yeah.
So you're almost incentivizing you having lower revenues by helping them solve their problems.
Yeah. Yeah. It's interesting pricing model because we wanted to, at its core, we can improve their churn rates and have people churn less. So if people churn less, they could potentially pay us less money. And that seems weird if we were helping them out so much that then our costs would go down because of that. So we came up with the concept of sessions. So it doesn't necessarily matter if they were saved or if they weren't, but so it's just more like views, if you will, in that regard. So yeah, I think there's a lot of ways you can do it. But there's, we did think about that challenge early on. If we had a pricing model that was based on just the number of people that churn, then we could potentially kind of shoot ourselves in the foot by improving their churn rates. Yeah.
And that's what I was thinking. It's like, wait a minute, like you do such a good job, you're firing yourself.
Yeah. Right. Yeah.
Which is never what you want to do. So Tony, when you are in startup land, there's always setbacks, right? There's always the one or two things that you look back and you're like, that really could have ended us. But normally those are the things that tend to turn it around and make the business soar. When I say that, is there one thing that comes to mind that's like, man, I could think of this moment where we almost lost it all. And in hindsight, it actually made us better.
Yeah, it's a really good question. I think there's definitely a few kind of, I don't know if you want to use the word traumatic events, but there's a lot of challenges in startup land, and it's a roller coaster, and the peaks are high and the valleys are low. And I would say, aside from kind of miscalculating on what our product should be, we kind of overcame that pretty quick. I don't think that was even close to kind of, killing us, so to speak. But when we founded ProsperStack, we actually had 3 co-founders, and we were all pretty close, and came from the previous company and all kind of branched off into our own and did that. And 6 months in, one of the co-founders just kind of a little bit out of the blue just kind of said, I just don't think I can do this anymore. Startup land is tough and it's not for everyone. And in that moment, in that time, it's really, it's almost depressing because you're like, man, is there someone that just doesn't believe in this? Like, does that mean that we're not on the right track? But I would say that we did rally from that front. That the third co-founder is still actually involved in the business, still helps us out, and is a big supporter of ours. But he was. I always kind of tell people, like, when they talk about the story of why he left, and he in his own mind thought that he wasn't as invested in this as the other two were, and honestly, the best thing he could have done in that situation is actually just come forward and say, I don't think I can do this full time. And even though in the moment that was really tough, coming through that and, having 2 people that were 100% dedicated to it, not that he wasn't, it's just, the level of which, I think is something that we improved through and just kind of stayed the course. We had to have like maybe a little rally there for a minute and really pep ourselves up, but it ended up working out.
Yeah. And you talk about dedication. Yeah, you talk about dedication, and I think it's as people are coming into the business, as you're growing, I think the people that come in behind don't realize how much dedication you're actually running with. How do you find people that have that same, they're never going to have the same dedication as you? And we talk to founders a lot about this, but what are a couple of things that tips that you can give to founders out there to help them find people that could be in this? Because the startup space isn't for everybody. Even if you're not an entrepreneur, like coming in as like the first couple employees, even up to 100 or whatever, it's hard.
It is. Yeah, I would say, I always knew kind of in the back of my mind that I think I wanted to at least try my own startup at some point. And I was, I wanted to get the experience I needed. I didn't, I was like, 10 years into my SaaS career, and that's where it started to come into play. But throughout that time, I was, hiring people, working with some really great people that I met along the way, and you forge those relationships. So, early on, I think your early employees are ideally people that you've sort of vetted out in your career in the past, over that time. So you bring on people that you already kind of have a standing working relationship with and know what they can bring to the table early on. So you can kind of do your trial and error, at a different companies almost, and then find out who's really good. And then you want to bring them on and kind of come there, because those early hires are so pivotal in your startup life. And you can't get them wrong, because if you get them wrong, then it's going to set you back and you don't have time on your side from there. And I think the second part is just having the realization that you're never going to find someone, and nor should you expect an employee to really have the same dedication or care level that you're going to do. Now, that's not to say that people aren't super driven and all that stuff, and we want everyone to have success if our company has success, and we do profit sharing plans and all that stuff, but stock options. But at the end of the day, you have to know that you're going to benefit the most from this being successful, and that's directly tied to your effort level. So for us, it's just always having the mindset of never expect everyone to do exactly what you would do, but hire the best people you possibly can, and incentivize them to do well in your company.
Love that.
Let's talk about your leadership evolution a little bit. Let's talk about, from working in a company to owning your own startup to how you expand. How has your leadership style changed?
Yeah. It's another great question, and there's a lot of kind of learnings along the way. And I started young in the SaaS space, so I wasn't a leader, and then I was a leader, and then you're sort of leader by default.
Yeah.
But I think you observe, you find mentors in the space, whether it's your boss, whether it's someone in a different company or someone you're connected to, and you observe their style of leadership and what is clicking with people and what's not, and you learn as much from the good things that they do, and I think you learn even more from the bad things that you do and say, I would never do that. So I think you do that. I think when one thing that I've come to realize is, everyone has a different goal in their career and in life, right? And not everyone aspires to be a CEO or a head of sales or a CFO or anything like that. Some do. And I think the biggest thing that you can do as a leader is to really understand where people want to go. And that's a constant moving target, right? That what they say to you one quarter might be different the next quarter, but it's your responsibility to work your best to guide them to that goal. And if you can't guide them to that goal, be really upfront and honest about that, and just, making sure. So I think you just don't ignore that, and don't assume everyone wants to be the head of the company at some day. Some people are very happy being account executives, or, not every developer wants to manage other developers, right? So just being aware and talking to your employees and learning what they actually want to do, and then support them on that, is probably the one of the best things you could do for them as a leader.
Love that. Yeah, I love that. So at Revenue Reimagined, we believe in giving more than receiving, and you've been generous to give something to the audience, Tony. So tell them what it is.
Yeah. So, I mean, here at ProsperStack, what we do is we help subscription companies with their active churn problems. So what I'd be happy to do and offer, and obviously no strings attached, but is to really just do an active churn strategy session with someone, spend a half hour, 45 minutes, whatever it takes. Take a look at what you're doing right now, look at your current process, what you're doing, and I can share best practices of what we learned through working with, dozens and dozens of companies, and what sort of strategies are working best for them. And you can implement those on your own. You can look at something that we offer as a solution. It doesn't really matter to me. I'm just happy to help and help you improve your churn, grow your LTV, and improve your business.
I love that. There's a lot of people trying to figure that out.
Mm-hmm. Yeah, absolutely. All right, let's jump into some rapid fire as we wrap it up.
Okay.
Tony, if you are not in tech, you can't be in tech anymore. What profession are you going to be in?
Really good question. It would be something with my hands. Like, honestly, I think I would do something like carpentry, electrical work. I don't know. I like tangible things. I think that's one thing that I always struggle with. Sometimes you're behind a computer all day. You're like, what did I produce? But so like in my hobbies, I like to do that kind of stuff because it's like, oh, I spent this time and here's this object that I've created or worked on and that has a result. So maybe something like that.
I love
Very
that.
cool.
Yeah, I don't know though. You've been a founder your whole startup world, so it may be a complete shift for you.
Yeah, it would be a huge difference. But you said, hey, if I wasn't in tech, so it's got to be different,
100%.
right? Yeah,
What's the first app you check when you wake up in the morning?
Calendar. I got to know what's on the agenda. Yeah.
You don't check the night before, next morning?
Sometimes if I know I have a morning one, I double check it, make sure if I have to get up at like extra early, I'm not going to miss it. But yeah, otherwise the calendar is usually the first thing I scroll to.
What's the one word you would use to describe your startup journey so far?
I would say rewarding. It doesn't come without challenges, but I think even through those challenges, it's one of the most rewarding things that I've done in my professional career. And I wouldn't go back and change that for anything, even though it was risky.
Yeah. You've been at this game for a little bit of time. So what's your go-to productivity hack?
Yeah, as a leader of a small startup, you're pulled in every different direction. And it's really basic, but I've used a couple dedicated apps for it, for like the getting thing done strategy. But I basically keep checklists of things that I have to accomplish, because I might get a Slack message from someone in sales that has some questions on something, and then I might get pulled into a meeting to talk about some product direction, how we want to build something, and you just get pulled so many different ways. You have to sometimes just find time to get like those really small, repeatable tasks done. And I still got to make sure payroll gets run. I've still got to make sure our books are closed at the end of the month. And it's just, there's too many different directions you're pulled in. So just dedicating time to each space that you're responsible for, and really just having a checklist to do it is something that I found helps me a lot.
Love that.
Absolutely. Early bird or night owl?
More of a night owl than an early bird. But as I get older, I find myself going to sleep earlier and waking up earlier as well. So.
Awesome. Last one, wrapping it up. What's your dream vacation destination?
I would love to go to Greece. I have some, ties there. Part Greek. I know I don't look it at all. I am part Greek, and I just always wanted to go back there and kind of see where our family came over from that area, what village they were in, and all that fun stuff. But no, I'd love to go to Greece.
Love that.
Yeah, Greece is definitely on the list, for sure. Tony, thank you so much for coming and chatting with us. Thanks for chatting all things startup. Where can folks head to learn more about you, learn more about all the things that you all are up to over there?
Yeah, you can find us. Our website is ProsperStack.com. You can find me on LinkedIn under Tony Sternberg. I do post a lot there. I talk a lot about churn and retention and different kind of strategies, and even some just general like startup thoughts and things. So always happy to connect on there. If not for now, if for later, or maybe you can help us out too. So we're I would say on our website or on LinkedIn are the two best spots to get a hold of us.
Awesome. Tony, thank you so much for joining us, man. We appreciate it. It was great to chat.
Yep. Thank you, Adam. Thank you, Dale. It was great to be on, and looking forward to it.
Cheers.
Cheers.